Hello everyone and welcome to this video in the Learn Technical Analysis series brought to you by thetechnicals.com. Today we're talking about identifying some key candlestick patterns when trading in the financial markets. But before we get to that, as always, just a quick risk disclaimer. Trading in the financial markets carries a high level of risk and may not be suitable for all investors. Before deciding to trade in the financial markets, you should carefully consider your investment objectives, level of experience, and risk appetite. Okay, let's get started. Now, there are numerous candlestick patterns that have been identified and named with the intent of providing clues as to the potential behavior of market price action. While candlesticks provide the same price information as a function of time that bar charts do with their open, high, low, close prices, candlesticks go a step further by providing additional visual indications. These indications help to describe the ongoing conflict between market bulls and bears. Once this conflict is described, it can be employed as a useful technical tool for trading. Now here are the basic structures of bars and candlesticks. As we can see here with the bar, we have the opening of the period on the left-hand side, the left-hand stem as we can see here. And then we have price going up and down and up within the period, hitting a high up here, hitting a low down here, and then closing the bar and closing the period on this right-hand stem right here. Now, candlesticks are very similar in that they have the same high and the same low. It's the real body that makes the difference. Right here with this candlestick real body, if it is a bullish candle, then it's either white or green for the real body. If it's a bearish candle, then it's either black or red for the real body. Now, one commonly used candlestick pattern is actually a combination of two opposite patterns, the hammer candle and the shooting star candle. Both of these patterns have a small candle body on one extreme and a comparatively long wick or shadow on the other extreme. Hammers and shooting stars may also be referred to as pin bars or Pinocchio bars in the bar chart world. These patterns represent potential price rejection and failure of price to move in the previously prevailing direction, and a possible subsequent turn or reversal. These candlestick patterns are especially strong when they occur around established support or resistance levels. When coupled with other candlestick patterns and technical analysis tools, hammers and shooting stars can be very helpful in determining underlying market forces. Now let's take a look at the hammer candle. The hammer candle pattern is considered a bullish turn indicator. In order to be deemed a hammer, the candle has to follow a down move, as we can see here, or a succession of bearish candles. The hammer itself has a small upper body with a long lower wick or shadow. The importance of the hammer lies primarily in its long lower wick. It signifies that price has attempted to continue the entrenched down move, but was rejected and failed at or around the period lows, ultimately closing out the period relatively high in the candle's range. Because price was unable to close a period low in the range, the interpretation is that bullish forces may have overpowered the existing bearish forces and an upside turn may be impending. Hammer candles often precede price turns and pivots to the upside. The shooting star candle pattern is considered a bearish turn indicator. In order to be deemed a shooting star, the candle has to follow an up move or a succession of bullish candles. The shooting star itself has a small lower body with a long upper wick or shadow. Like the hammer, the importance of the shooting star lies primarily in its long wick. It signifies that price has attempted to continue the entrenched up move, but was rejected and failed at or around the period highs, ultimately closing out the period relatively low in the candle's range. Because price was unable to close a period high in the range, the interpretation is that bearish forces may have overpowered the existing bullish forces, and a downside turn may be impending. Shooting star candles often precede price turns and pivots to the downside. Hammers and shooting stars are among the most powerful candlestick patterns, as they can provide strong indications of potential exhaustion in price moves and possible impending turns in the market. Please visit thetechnicals.com for more trading and technical analysis education. Thank you very much.